Hey there, I'm estate planning attorney Paul Rabelais, and in this video, I am going to look at three factors: age, net worth, and beneficiary makeup that can go into the decision whether to leave your estate through a last will and testament or whether to leave your estate to your beneficiaries of your revocable living trust. Now, some people too quickly give the advice that if your estate is larger than X, you need a trust. Or if your estate is smaller than X, you should have a will instead of a living trust, with X being some predetermined estate value, $150,000, $250,000, $500,000, or $1 million, for example. Well, it's not necessarily that straightforward. So let me preface this with the fact that most people who want to arrange their estate to make it as easy as they can on their survivors wind up with a revocable living trust-based estate plan simply because assets in a trust do not go through the court and attorney-involved probate process when you die. Rather, the successor trustee of your trust has immediate access after your death to distribute your trust assets to your trust beneficiaries outside of probate. But let's take a closer look at how your age, net worth, and beneficiary makeup can impact your decision whether to use a will or a living trust to dispose of your estate when you pass away. First, let's look at age. In general, this is just the way it is. Older people who think they are closer to the end tend to have a stronger desire to establish a living trust to avoid probate. A younger person who is still just trying to get by but is still concerned about how their estate will be handled when they pass away may choose to have an easier to establish will-based plan because the trust does little for them while they are alive and because they will save a few dollars now by going with the will-based plan, and it's a little easier to live with and service a will-based plan because you don't have to concern yourself with having all of your assets titled in your trust for the next 40 to 60 years, assuming you are, let's say, 35 years old today. In addition, if you are young and have minor children, there will be a probate when you pass away with minor children, because the will is the place where you designate the legal guardian for your minor children, and your will must be probated in order for a judge to establish the guardianship for your minor children. But on the trust side, many young people set up living trusts knowing that their will, which they have in addition to their living trust, must be probated when they die, but all of the assets in the trust will avoid the delays and expenses of probate. Second, let's look at net worth. I'm comfortable saying that, generally speaking, the wealthier you are, the more your estate will save by avoiding probate. But let's take a closer look. First, if you have a large estate, any executor fees that are based on a percentage of the estate will be higher the larger the estate value. But on the other hand, there may be trustee fees in settling your living trust, and those fees may be the same as what the probate executor fees would have been, or they might be less because settling a trust is generally viewed as easier than settling a probate. In general, probate attorney costs tend to be greater the larger the estate, even though some larger estates that have more zeros in the account values require less legal work than some smaller estates that have complications. And note that someone may have a $3 million estate, but the probate estate is only $300,000 because the bulk of the value of the estate is in retirement accounts like IRAs and life insurance that, by their nature, avoid the probate legal process because these days there is a trend that will likely continue as easier to use probate avoidance techniques such as beneficiary designations, payable on death accounts, and transfer on death accounts gain more acceptance. But my conclusion is that there is no set number that we can say that anyone with more than X should have a living trust, and anyone with less than X should not have a trust. Third, let's look at beneficiary makeup. Again, generally speaking, the more people and participants that are involved in a probate, the more difficult the probate is likely to be. For example, a married person may have a $5 million estate, consisting of just a couple of accounts that they leave to one person, their spouse. That probate is likely to be much simpler than the probate of someone who has only $100,000 of assets, but is leaving it to 8 different people, many of whom do not get along with each other. I could make the argument that the person with the $100,000 estate should have a living trust to keep the estate and the 8 participants out of the probate court process. But the person with the $5 million estate, leaving it to one person, may, depending upon their state rules and state probate expenses, may have a relatively manageable probate process. So the bottom line is that I cannot give you an estate value number and say if you have more than X, do a living trust, and if you have less than X, do a will. But I can tell you that there is more involved in setting up and maintaining a revocable living trust the right way. But that inconvenience can easily be offset by the satisfaction that you will have knowing that your family and loved ones can avoid the hassle and expense and delay of the court and attorney-involved probate process when you pass away. And your age, net worth, and beneficiary makeup all typically play a part in whether you leave your estate to your heirs or beneficiaries through your last will and testament or your revocable living trust. Now just make sure you like, subscribe, and comment below, and we'll see you next time.